All right, so today we're going to be taking a deep dive into RattanIndia Enterprises. They're this company that's kind of quietly but quickly making a name for themselves in India's digital economy. We're talking everything from like the clothes you wear to the drones you see flying around. And you sent over a bunch of their stuff, their Q2 FY25 reports, presentations, even like an auditor's report. It seems like you really want to get the full picture of, how are they doing? What are they betting on? And what does it all mean for their future?
Yeah, absolutely. So, like, right off the bat, what really jumps out at you is how they've totally changed their game. I mean, they used to be like a classic non-banking financial company, lending money directly. But now they've gone and become this unregistered core investment company, which basically means they're all about investing in other companies instead of doing the lending themselves. Now, this gives them a lot of flexibility, but also comes with some risks, especially for investors who are used to the kind of transparency you get with a more regulated company.
So it's like they're not just happy being a lender anymore. They want to be like a major player in this whole tech boom that's happening in India. And looking at their Q2 results, it's kind of a mixed bag, right? On one hand, their revenue is up a solid 31% compared to last year, driven mostly by their e-commerce and EV ventures. But on the other hand, they've also posted this loss of a whopping 242 crore rupees.
Yeah, that loss is a bit of a head scratcher at first glance. The main culprit seems to be an unrealized loss from their investment in Rattan India Power Ltd, which is, operating in that super volatile energy sector. But, and this is super important to remember, their core businesses, the ones that are really driving their tech strategy, those are actually doing really well. This whole situation kind of highlights how those short-term ups and downs in the market, they can sometimes hide a company's true strengths.
Right, so it's like a bit of a roller coaster with their financials. But let's kind of break down their key subsidiaries, starting with Cocoa Blue Retail. This is their e-commerce arm. And get this, they've managed to rake in over 5,500 crore rupees in revenue in just 2 years, which is great. That's even faster than some of the big names in Indian e-commerce. How are they doing that?
Well, for one thing, their reach is phenomenal. They've fulfilled over 3.4 crore orders just this quarter, reaching practically every nook and cranny of India. But what's really smart is their focus on building their own brands, like Accord for musical instruments, Kaari for ethnic wear, and Neomate for stationery. This lets them have much more control over things like product quality and pricing. And it also helps them build stronger brand loyalty, which is crucial in such a competitive market like India.
So they're not just another online marketplace. They're creating this whole brand world of their own. Now, let's move on to Revolt Motors. This is their electric vehicle venture, and they've just launched the RV1. It's India's first electric commuter bike, and they're going straight for the mass market with a super competitive price. Plus, they managed to finally overcome that FAME2 subsidy issue. Could you quickly remind our listener what that was all about, and tell us what it means for Revolt?
Sure. So the FAME2 scheme, which stands for Faster Adoption and Manufacturing of Electric Vehicles, it's a government program that basically gives subsidies to encourage people to buy EVs in India. Revolt had some trouble getting these subsidies at first, which, created a lot of uncertainty. But now they've finally cleared that hurdle, which makes their EVs even more attractive to budget-conscious consumers. This is a huge win for them.
It sounds like they're really setting themselves up for success in the EV market. They're also expanding their dealership network like crazy. They're up to 154 stores across the country. They're definitely thinking long-term, making sure they're ready for the growing demand for EVs. Now let's switch gears and talk about Neoski, their drone subsidiary. This is where things get really interesting. They're not just making those little toy drones you see everyone playing with. They're building drones for some serious applications, and they're attracting some big-name clients.
Yeah, this is a really exciting area. They've been showing off their drones to the Indian Army, the Border Security Force, even to like high-ranking government officials. What's really key here is that they're showing how these drones can be used in the real world, like helping with flood relief in Andhra Pradesh and providing night surveillance for the BSF. They're proving that drone technology has a lot of practical power beyond just being fun to fly around.
So they're really positioning themselves as the leading provider of drone solutions for different industries.
Yeah.
What else makes their approach unique?
Well, they're building what they call a full-line business, which means they're doing everything from consumer drones to enterprise solutions to even pilot training. They're not just selling drones, they're building this whole ecosystem around them. It's a bold move, but they're aiming to capture a big chunk of the rapidly growing drone market in India.
All right, so we've covered e-commerce, EVs, and drones. Now let's dive into their fintech venture, Wethin. What's their strategy there?
Well, they're riding the wave of India's exploding digital finance sector, which is projected to reach a massive 354 billion US dollars by 2028. WEFN wants to be the one-stop shop for all things financial, offering everything from personal loans and credit cards to account aggregation. And they've got this huge partnership network with over 45 banks, NBFCs, and other fintech players. This gives them access to a massive customer base right out of the gate.
So it sounds like they're in a really good spot to capitalize on this digital finance boom.
Absolutely. But there's one key aspect we haven't even touched on yet, their funding strategy. And this is where things get really intriguing.
Ooh, I love a good cliffhanger. All right, we're going to have to pause there for now. But don't worry, we'll be back in a flash to uncover those funding details and dig deeper into the potential risks and opportunities facing RattanIndia. Stay tuned. Okay, so we're back and ready to dive into this whole funding mystery. You mentioned things get pretty interesting here. So how are they actually paying for all of this, this huge expansion across so many different industries?
Well, that's the thing, right? When you look at their financial statements, it doesn't look like they've gone out and raised a bunch of public money. They're mostly relying on their own resources and strategic partnerships. Remember, they started out as an NBFC, so they had this solid base of capital to get these ventures off the ground.
Okay, that makes sense. So they're basically using their existing capital to fuel all these new businesses. But isn't that kind of risky? I mean, relying so heavily on internal funding, doesn't that limit how fast they can grow? Especially in markets like e-commerce and drones, where everything moves so quickly.
Yeah, you're absolutely right. It's definitely a gamble.
Right.
On the one hand, it keeps them independent,
Yeah.
right? They don't have to answer to a bunch of outside investors or worry about market pressure.
Hmm.
But yeah, on the other hand, it could slow them down,
Okay.
especially in sectors where you need to move fast and invest aggressively to beat the competition.
So it's like this trade-off between control and growth.
Mm-hmm.
What did this funding strategy tell us about their overall approach?
I think it shows that they're in it for the long haul. They're not just chasing quick profits or trying to please the market every quarter.
Mhm.
They're really focused on building a solid foundation for the future.
Okay, that's an important point for anyone who's trying to understand how they operate. Don't get too caught up in those short-term ups and downs, right?
Yeah.
Look at the bigger picture, the partnerships, the long-term vision. Now, let's zoom out a bit and talk about the context here. RattanIndia is basically betting everything on the growth of India's digital economy. What are some of the factors that could make or break this gamble?
Well, the government plays a huge role, of course. India has been really pushing for digitalization lately, right? With initiatives like Digital India and policies that encourage a cashless economy. If this keeps going, it's going to be a huge boost for companies like RattanIndia.
But what happens if the government changes course? Or if people start pushing back against digitalization, which has happened in other parts of the world?
Mm-hmm.
That could really mess things up for them, couldn't it?
Definitely. Political and regulatory uncertainty is always a risk, especially in emerging markets.
True.
A change in policy or even just a perception that things are getting riskier. That can scare off investors and slow down digital adoption, which would directly impact RattanIndia.
And let's not forget about the competition. They're going up against some really big players in e-commerce, not to mention the fierce rivalry in the EV market and all those drone startups popping up everywhere.
You're telling me.
It's a tough landscape out there.
Absolutely. And then you've got all these international companies looking at India like this massive opportunity.
Yeah.
The competition is fierce, and it's only going to get more intense. RattanIndia needs to be smart, innovative, and honestly a little bit lucky to really succeed here.
So it's not going to be easy for them, but they must have some advantages, right?
For sure. One big one is that they really understand the Indian market. They know what consumers want. They understand the culture. And they've built these strong relationships with local partners.
And let's not forget about the power of the RattanIndia brand itself. It carries a lot of weight in India, which could give them an edge in terms of building trust with consumers and forming strong partnerships.
Absolutely. They've also shown that they're willing to adapt and experiment.
Right, like shifting from an NBFC to a core investment company.
Exactly.
Yeah.
They're not afraid to change direction if they see a better opportunity.
So we've talked about their financials, their
Mhm.
different subsidiaries, the risks and the opportunities. But there's one more thing I want to touch on, something that makes this whole RattanIndia story even more interesting.
Oh, yeah, their corporate governance practices. And their pretty impressive advisory board. This is where things get really interesting.
All right, let's talk corporate governance and this advisory board you mentioned. It sounds like there's more to this story than meets the eye.
Well, yeah, one thing that really stands out is their focus on, transparency and ethical practices. Like they've put in place this really solid corporate governance framework with committees that are actually led by independent directors. And their financials are audited by Walker Chandiok and Co., which is a huge name in India. So you know they're serious about doing business the right way.
So they're not just going through the motions. They're really setting a high bar for themselves ethically. Now, what about this advisory board? What makes it so special?
Oh, man. It's like a who's who of industry giants. You've got people like Arun Dugal, he's the chairman of ICRA, a major credit rating agency, and Yashish Dahiya, the co-founder of Policy Bazaar, which is huge in insurance tech. And then you've got Ranu Vora from Avendus Capital, a top investment bank. These aren't just random names. These are people who've built and scaled successful businesses in India.
So they've basically got this dream team of mentors to guide their strategy. What kind of signal does that send to potential investors and partners?
I think it says a lot about their credibility and their long-term vision. It shows that they're not just chasing the latest fad.
Right.
They're serious about navigating the Indian market with the help of some of the best minds out there.
So they're playing the long game, building a company with strong ethics and guidance from some heavy hitters. What does all this mean for the future of RattanIndia?
Well, predicting the future is always a gamble. But they've definitely put themselves in a good position. They've got a clear vision, a talented team, a solid governance structure, and this network of incredible advisors.
And they've shown that they're willing to adapt, embrace new technologies, and think outside the box. It's not your typical corporate story.
Exactly. It's a reminder that in business, the future really depends on the choices you make, the risks you take, and the vision you have. Will RattanIndia become a leader in these industries? It's hard to say for sure, but it's going to be fascinating to watch.
Absolutely. For our listener, we encourage you to really dig into RattanIndia's story. Take a look at their financials, follow their progress, and see how things unfold.
It's a story of ambition, transformation, and taking calculated risks. A good reminder that in the constantly changing world of business, being able to adapt, innovate, and learn from the past is key to shaping the future.
Well said. And on that note, we'll leave you to ponder the possibilities. Until next time, keep diving deep, keep exploring, and never stop questioning.